The boring index I built, it was December 2022. I was thinking that I should do something very boring as an exercise to test my own capacity. I wanted to do something in a space where I had not done much before. A lifelong microcap and small cap investor, I never saw the need to buy large caps prior to that. Most of my wealth was made outside of large caps. I thought, why not test my portfolio construction skills and investment ideation skills in the large cap space? Not just test my skills, I thought, why not restrict my activity to the barest minimum and discretion to levels which were really rock bottom. So what did I do? I created a boring stocks index on the 1st of January 2023. This index has been in the public domain from 1st January 2023. I have done it mostly in Tamil. And over these 30 months, every month we would discuss this index, its performance versus the Nifty 50. And most importantly, we explored equal weight investing. We explored static portfolios, no trading, and saw what we could do better than, let's say, the index or anything else that you wish to benchmark against. This was the exercise. And I wanted it to be a public exercise. What if I came out looking very ordinary or maybe even stupid? So be it. So this was the exercise I did in Tamil. Today we are moving this exercise into English on my channel, and I'm going to show you what happened in this journey. What is this boring stocks index? It was a portfolio of 10 stocks, each weighing 10% in the portfolio. These stocks can be changed only once in a calendar year. So we started on 1st January 2023 with 10 stocks. On 1st January 2024, we changed 3 stocks. We took out 3 stocks and brought in 3 stocks. Post 1st January 2023, we have not made any changes. So 18 months have gone post the first change, 30 months since we began, and our portfolio has done much better than the Nifty. And by doing so, we have broken several stereotypes. Let me tell you what these stereotypes are. First, that the best way to do large cap investing is only through indexing. You cannot beat an index. This is one of the stereotypes that has been propagated very actively. There are different motives behind any stereotype. Behind this particular narrative and stereotype is the motive that fees should not go to active management. It should instead come to the person who tells you to do indexing in some form or the other. It could be through webinars, classes, calculators, Excel sheets, whatever. The second motive is to make people stop believing in large cap and make them only believe in the other active product categories. Now, this is a far more mischievous motive in my opinion, because your risk taking goes up significantly at the wrong time, which could lead to significant drawdown in your portfolio, erosion of capital, and sometimes you may not have the risk capacity or the stomach to take notional losses and sharp drawdowns. So far, people have been lucky that this narrative against large cap has not done as badly as it ought to, but any day it could. My intention was to make people believe more in large companies, or at least be objective about it and not blindly trust indices. Let's go into this exercise and see what has happened in this portfolio. Our initial portfolio had 10 stocks, out of which 7 remain to this day. The 7 stocks in this portfolio that have been there since inception are HDFC Bank, Coal India, ICICI Bank, Larsen & Toubro, Britannia Industries, Sun Pharma and ITC. We made 3 changes and brought in Reliance Industries, Bharti Airtel and Maruti Suzuki. What are the stocks that went out? We took out Power Grid on Jan 1, 2024. We took out HAL on Jan 1, 2024. And we also took out Tata Steel. These are 3 companies that went out. So just one change, 3 stocks went out. We rebalanced the portfolio on Jan 1, 2024. We once again rebalanced the portfolio with the same stocks on Jan 1, 2025. We started with a sum of 1 lakh invested in 10 stocks. It could even be 1 crore. It all depends on what you want as the portfolio size. This 1 lakh was invested in 2 places. It was invested in the Boring Stock Index. It was invested in Nifty 50 TRI. And we are calculating performance and computing the difference every month. On the first of every month, we compute the difference. Let us see what has happened from Jan 1, 2023 to date in the Nifty 50 TRI. You would have made 1,45,167 rupees out of an initial investment of 1 lakh. It factors in all the changes in the Nifty 50 automatically. So the simple return you made investing in Nifty 50 over 30 months is 45.17%. Impressive, right? Now the approach I took is pick only few companies among large caps and don't buy any company outside of the large cap space. By doing so, what we achieved was 1 lakh invested in January 1, 2013 became 1,82,665, giving a simple return of 82.67% over 30 months. We also believe that trading should not be undertaken because it has tax consequences, it has reinvestment risk. You may also sell your winners to buy losers. We don't want any of these. We just want to make changes when it is a time to make a change, and the rest of the time we sit back and relax. This portfolio has not been on any small case or any other place. It's just in the public domain. We have not put it as part of any of our professional work. It's purely an academic exercise that I am undertaking in the public domain transparently so that people understand how even within an index, good stock picking will always deliver. Very simple intent, very straightforward way of doing things, and a very honest way of looking to improve what we do as investors. I don't like dumping everybody down and telling them go to the index. I don't like people taking suboptimal choices simply because they are brainwashed to do so. I like them to think, and I like to show them the best way to think. And when I do these 2 things, most people understand the merit in what I'm saying, the merit in their thinking differently, and how their lives can change when we engage in these conversations on investing and how to become better investors. The Boring Stocks Index is just one of the products that I have created in the last several years. There are many other products that I am creating and testing live, both in the public domain and in the private domain. This product was a very interesting product for me because, as I told you, I am not really known for my large cap investing. But I still like to learn, and learn by doing mistakes, learn by being open and transparent, learn by being very public about what I do, but keep learning all the time. Let's learn together, and this Boring Stocks Index is another way for us to learn. From next month onwards, we'll keep looking at what happened in this index and keep tracking and learn together. Thank you very much.